So the World Cup is over. Soccer fans, football fans are sad. Like me, I'm sad because it was amazing. What an incredible, 100 plus games month. Problem is now I don't have anything to watch. I'm not a fan of basketball, at least professional basketball. I can't wait for football, like American football.
I've been waiting all day for Sunday night. The tough get rough in a primetime fight.
How much does this say that this is a tough time of the year for sports, that ESPN in the middle of the day on a Saturday was rebroadcasting some wrestling pump-up show from last weekend? I don't know. But this is not about the doldrums of sports. Welcome to Covering HOAs with One Hot Mic. Today we are going to talk about lessons that have been learned from the claims process. It's important to keep in mind that everything I'm about to talk about is real. These are real scenarios, real claims, real things happened. We're also going to discuss it in a way that we can understand what could have been done, what the better practice would have been, so that it doesn't happen again. Or so that you, two fingers, because you never point, Disney. So that you, if presented with a similar situation, can avoid the disaster that others had to deal with. And our first example has to do with reviewing applications. We, as the insurance broker, we complete applications based on a lot of information that we have pulled together from documents, from websites, from history, from information we get from the community manager. But we don't have everything all the time. So it's important when you get presented with an application, or you get presented with some document that makes some statement about the association, you got to read it. You got to pay attention to it. In this example, an agent failed to schedule several buildings. There was a hailstorm and no coverage for the buildings that were not scheduled. A schedule is a list of properties that are covered under this policy. The opposite of scheduled is blanket. We just say, here's a blanket limit of coverage for this peril. And we don't really have to name or show all of those properties in the policy. Scheduled policies typically are difference in conditions policies: earthquake, hurricane, hailstorm, obviously in this example. So the fallout is that the association is exposed to cost to repair the damage. And because they're now going to put the right coverage in place, they're going to pay more premium. In this case, when it ultimately did become clear that they needed to add more policy or more buildings to the policy, premium went from $30,000 to $500K, or the carrier added a roof exclusion for the damage by hailstorm. Basically, they're still not covered, but now nobody's covered because this carrier didn't necessarily want that risk. And in order to accept that risk, they went this route. To combat that, to mitigate that, the association went from a condominium style community to a single family home, PUD, townhome style community, which means there's a lot of unrepaired roofs and there's a potential for a D&O, directors and officers, claim for negligence by the board of directors. Read the policy, know that we have 15 buildings and only 5 of them are listed. We need to catch that. And all we have to do is read it. And oh, by the way, when you sign your name to that policy, that whatever is disclosed on that becomes your responsibility, not the broker's. You can have an argument that the broker has some professional liability, and you'd probably be very relatively successful in fighting that or making that argument. But again, you can avoid the whole thing by just reading the policy or reading the application before you sign it. It is important to understand the deductible on an insurance policy and how it would be addressed by the membership, especially in a large loss. Again, a hailstorm triggered a massive special assessment because when it's written properly, the deductible on a difference in conditions policy is 10% of the replacement cost. In this case, 10%, could be 5, could be 25, 10% of the replacement cost of the building that was damaged. In some cases, it's actually 10% of the total insurable value of the community. So if we have a 10% deductible and we have 10 buildings that are or would be replaced at $1 million each, $10 million of total insurable value, our deductible either applies to the building, 10% of 1,100,000, or the total insurable value, 10% of 10 million, $1 million. It's going to be determined in the policy. Problem with a 10% deductible is many CC&R, covenants, conditions, and restrictions, the governing documents for the community. Many CC&R actually provide language that says you can't have a deductible of more than 5%. That's very parallel with lending guidelines, particularly Fannie Mae, Freddie Mac, who say, we will not accept or we will not lend on a property where the deductible is more than 5% of the total insurable value of the community. Whether that deductible applies to one building or to the entire community, when you put it all together, at the end of the day, you've got a 10% deductible on the TIV, the total insurable value. So you're outside the scope of the CC&R. You're outside the scope of lending guidelines, and you face a possible D&O claim because you're in breach of the CC&R, breach of the governing documents. What do we need to know? We need to know that we need a lower deductible. We need to know that we need to pay for that sometimes, because that's part of our risk management. Transferring risk is the purchase of insurance, but there's a component of that we have to accept. That's the deductible. And in this case, we want to buy a 10% deductible because of the price, but we can't because we need to buy a 5% in order for our homeowners to sell or refinance their properties. So knowing the deductible and how it's going to impact things other than just that claim is key. This one's kind of sad, if not quite sad, but it has to do with common area maintenance. In this example, a babysitter is crossing a street, pushing a stroller with a 5-year-old child in it. A driver ran a red light that was obstructed by a tree limb on the HOA property. The HOA is partially liable because the tree is on their property, even though they've contracted with a tree maintenance specialist, landscaper, arborist, what have you. They're still liable because it's their tree. The landscaper, the arborist, the contractor didn't trim the tree, So they are also going to be partially liable. But when you're doing your property walks, look for these kinds of things. You should be doing property walks at least monthly. I'm guessing most of us, if we're the board of directors, we're looking for things just as we're walking through our community. We know other people are looking at things and calling us on the carpet for this concrete that's been lifted or there's a sprinkler that's leaking. So other people are also looking, but make it specific, make it intentional to look at all of these items. And I'm sure your insurance broker can give you some sort of a list of what a property inspection, what a property walk should look like on a monthly basis. These are the components, these are the things that we need to seriously, specifically look at. In this case, a $10 million settlement was awarded. I don't know personally, I don't know the result of whether there was a death. You can look it up. It was in San Jose, California. Point is, it's something that could have been avoided just by your property walk saying, that's a red light, that's a tree. They can't see, the drivers can't see the red light because of the tree. We need to trim that tree. And we need to do it soon, because now that we've identified it, we can't let it linger. We can't let it linger. You have to let it linger. We can't let it linger because now we know about it. And if we don't do anything about it, it's going to be a bigger problem. So in that property walk, it's landscaper. We've identified this thing. Get a crew up there today and clear that out. A lot of these disasters are loss of life disasters, and that's the saddest kind when they could have been avoided. In particular, in Texas, there's a drainage canal. The HOA backs up to the drainage canal, and the fence that keeps people from going into the canal is the association's responsibility. Landscaper left the gate open. Child walks in, falls in drainage canal, and doesn't get out. Unsecured points of the property are ultimately the responsibility of the association because it's your gate. Would an insurance company do something to bring the landscaper into this conversation? Absolutely. But first and foremost, it's the association's responsibility. So making sure that your gates close or close automatically would be the ideal way to avoid something like this. Because unsecured access points are just liability problems waiting to happen. Whenever we have a project, we go out and we ask from our vendors, from our contractors, from our service providers, a certificate of insurance. A certificate of insurance is typically written on an accord form. It says so at the top, accord, certificate of insurance or certificate of liability insurance. But there's an important paragraph right below that indicates a certificate of insurance is not a policy of insurance. It is not evidence that there is a policy in force. It is simply for informational purposes. If you have a certificate, that's great. You feel comfortable. Maybe we can move farther down the path of getting this project planned, implemented. You need to get the actual additional insured endorsement that would be attached to the contractor's policy. Whether that's a specific scheduled endorsement saying, for the purpose of the contract between X contractor and Y HOA, the HOA is named as an additional insured, and it will show you different language. Many contractors' policies actually write a broad additional insured endorsement that says essentially, if this contractor is engaged with a contract with the HOA, that contractee is automatically an additional insured for the course of the project. It helps the contractor not have to try to keep track of all that stuff. It helps the insurance company. It's just easier. Plus, a lot of times if you actually add an additional insured, there's a price to it. Or a cost to it. So it's to benefit the contractor. But if you're not actually named as an additional insured, you still are exposed, and you need to make sure you've got that documentation in your back pocket. A couple of examples of this. I was asked by a manager to review the certificate for a painting contractor. Painting contractors are typically the base coverage allows them to work up to 2 stories off the ground. After that, 3-4 stories, you've got all kinds of other safety measures. OSHA gets involved. It's more difficult. If you do want to work on 3 and 4 story buildings, even 5-story buildings, a contractor can purchase insurance for that. But obviously it's going to be more expensive. So it's important to confirm that if you're working with a painting contractor, especially if you have a 3 or 4 story building, that you actually are named as an additional insured. In this case, I can't tell anything from the certificate. I would need the actual policy. I'm not going to get that policy, but on a certificate of insurance, the name of the broker and their contact information is right there in the upper left-hand corner. So I called the broker. I said, "Hey, Bob the broker, I got your painting contractor cert here because I'm working with Happy Oaks HOA. They want me to confirm that your contractor is insured to work on a 4-story building," because these are 4-story buildings. He said, and I quote, "You know they're not. I just gave them the certificate so they could get the job." Everybody got their breath back? Yeah. That's frightening. And how many jobs had that guy done before this was discovered? Another example is a chemical burn in a pool. A pool contractor dumps a bunch of stuff into a pool. Before there's any warnings or notices put up, somebody jumped into the pool. The contractor wasn't actually insured. So there was no even a certificate of insurance. There was certainly no additional insured. Cabinet floods because an uninsured subcontractor hits a water line, or a pipe fire because an uninsured plumber starts a fire in a common wall. Fires are interesting things because fires are typically going to be covered. And in fact, this case, it was $750,000 was paid by the insurance carrier for the association, even though the plumber was hired by a homeowner and that plumber was not insured. You can talk about the logistics of how to make sure that doesn't happen in the future. And there were things in place for this association to avoid this kind of a loss, specifically if you're cutting into common area or going into common property. You have to notify the association, in which case the board has the right to say, okay, you're going to do this with your contractor. That's fine. We need that contractor to be licensed, insured, and name the association as an additional insured because he's entering the common area. And that's not just your space, that's everybody's space. Making sure they're insured, step one. Step two, get the actual additional insured endorsement, not just the accord form. All right. So we've all heard the stories of things being written on the back of a napkin. Well, a contractor agreeing to a quote that was written on the back of a bar napkin is not a written contract according to the insurance company. It needs to be a formal contract. Because it's not a contract acknowledged by the insurance company, any claim will be denied. And in one case, that, at least the example that my team sent me, was an HOA became responsible for $600,000 of a settlement. Now, the contractor did have a certificate of insurance. They did say on their certificate that they were adding the association as an additional insured. They got the formal confirmation that the additional insured endorsement it was the broad stroke language, wasn't a specific schedule. So it was this contractor is entering a contract with these people, therefore, or this organization, therefore that organization is an additional insured. But because the contract wasn't actually a contract, it was just some words on a napkin, not covered. It stems from a resident slipping on steps that the contractor installed. Or, well, he installed, but he also moved some handrails. That was a problem. Mentioned property inspections. Insurance companies are looking more and more now, more than they ever have, at what can an association do to avoid losses or control losses before we, the insurance company, allow the transfer to us, where we'll take care of the financial exposure, whether that's rebuild a building or pay legal fees. With property inspections, with loss control, you will identify those things. Without them, unapproved pavers turn into a trip hazard. Without them, non-railing code turns into a liability exposure. And this is a big one, by the way, this non-railing stuff. I hear it all the time. The association needs to have railing gaps that are less than 4 inches apart. There is a code too, and I don't quite know what it is, but I believe it's 44 inches tall. The railing has to be 44 inches tall on a balcony if that balcony is more than 3 feet off the ground or landing. But railing gaps are huge, and the pushback has always been that was code when we built it. That's fine. Probably fire sprinklers weren't code either when you were built. They're going to be now. And this is one of those places where an insurance company isn't going to look the other way. They're going to say, I'm not going to accept the transfer of your liability exposure until those balcony railings and those stair railings meet current code or our appetite limitations. Because business or building code is one thing, and a lot of times the insurance company is looking at that, is this to code? However, if the insurance company, even if that is a code, the insurance company doesn't have to write you a policy. They can say, no, that's still something we're not real comfortable with. Example, wood shake roofs that have been treated with some sort of fire retardant. That's not the word, but you meant what I knew. That they're treated with something that's supposed to help them not turn into kindling on a roof. Well, an insurance company may say that's all fine and good, but I don't care. Even though it satisfies certain requirements, recommendations from building contractors or even the building requirement, insurance company or building department, insurance company says, I don't care. I don't want a wood shake roof. There's too many variables in there. So getting those things, identifying those exposures on a regular property inspection, controlling your loss exposure is key in today's market, more so than it ever has been. In an emergency, in this case, burst pipe, it's flooding a unit. Do you know where your children are? Do you know how to turn off the water? If you don't, that's going to be a problem, because that's the one thing we need to do when there's a burst pipe. We need to shut the water off so the burst pipe will stop leaking, spraying water everywhere. Prime example is when you have an association or units that have fire sprinklers. It happens very often that somebody's just, maybe it's and maybe it's just as innocent as I want to hang a painting. They stick a nail or a screw, most likely a nail, into a wall, and they puncture a fire sprinkler line. That's under heavy pressure. I don't know how to turn the water off. I'm going to have a huge problem. Now, this isn't to say it's not going to be covered. I'm not talking about that, but the disaster could have been mitigated, probably not avoided, but mitigated by knowing where to go to turn the water off. Because this unit got 3 feet of water in it before anybody could be found who knew how to turn the water off. Educate homeowners on where their shutoff valves are. That's just, put it into your monthly newsletter. Just want to remind you that we have this policy when it comes to shutting off your water. If you're going to be leaving for more than X amount of days and you're not going to have anybody watching your house, your unit, you need to turn the water off. So you need to know where it is. And even if you don't have those policies in place, just know where the water shutoff is. But Mike, there's only one water shutoff for the entire building. That's fine. Shut it off. But the other owners in the building are going to be upset. Yep, they are. For a short period of time. We can explain it to them and we can say, Mr. and Mrs. Jones, I really understand how uncomfortable this, how inconvenient, that's the word I'm looking for, how inconvenient this is for you. I want you to know we're going to solve the problem as soon as possible. We'll get the water back on as soon as a plumber gets out here and can make it so that this thing isn't going to leak when we turn the water back on. We're doing that as fast as possible. But as much discomfort, as much inconvenience as this is causing you because you can't wash your dishes, I can't flood my house. So let's all work together and be neighborly. Deferred maintenance ends lives. You don't believe me? Look up Champlain Towers, Surfside, Florida. 6 years ago, a building collapsed. 99 people died. The problem was, everybody was aware of the problem. The board of directors was aware of the problem, but nothing was done. Now, the board of directors in this case tried to get something done, but the membership voted it down. Then there were some delays in the board actually meeting to discuss the problem. And it had been going on for years. It was well known that there's a problem with this building. The building collapsed because maintenance was deferred. In today's market, insurance companies are not going to insure your community if you have deferred maintenance. They're going to do a loss control inspection. They are going to find out you have dry rot, you have balcony issues, you have structural concerns. And when they do, they're going to say, hey, you need to fix this or we're out. So you need to undefer your maintenance. Bring everything up. But Mike, we don't have the money in the bank. Raise your assessments. But I got elected saying I wouldn't raise assessments. How realistic is that? The price of everything has gone up. Everything has gone up, especially over the last few years. It's not possible for us to continue to maintain our communities in a manner that will improve their property value, which is the responsibility of the board of directors, if we don't have the money to operate our community and keep it looking pretty. And the only way you can make money is by raising assessments. You can have a special assessment that has to be voted. There's ways to have an emergency special assessment, talk to an attorney. The point being, find the money to fund reserves, fix deferred maintenance, so that you save lives. This happens quite frequently. Actually, it is kind of freaky, but frequently. Unit owner says, I want to file a claim on the association's policy. Board of directors says, no. We're not going to let you file that claim because it's not HOA property. It's your pipe. It's your property. It's your problem. Well, there's two things that are wrong with that position. One, the association's insurance policy is purchased for the benefit of the membership. It is purchased with with money from the assessments that each member pays. Each member is an insured under that policy, and that policy is primary with respect to property damage. That means it comes first. The HOA policy is just as much mine as a member as it is any other member's because it's purchased for me by the association. So the board saying, no, we're not going to file that claim is blatantly wrong because you can't stop me from filing a claim on my policy. Also, boards will at times allow a claim to be filed, placating the unit owner, then turn around and tell the insurance company, because the board of directors is representing the association, they have this authority. Don't adjust that loss, withdraw that claim without checking with legal counsel and without checking with an insurance professional. You could be opening up the association for a decline of defense due to a deliberate act, a deliberate wrongful act. And if you do get legal counsel or insurance professional advice and they say, let the claim go through, and you still withdraw it, now you probably are exposed to a declination for a deliberate wrongful act. And then the association is left paying for its own defense. In a property loss, if a loss exceeds the deductible, let the owner file the claim. If you want to get the insurance professional involved to make statements about why filing a claim would not necessarily be to anyone's benefit, I'm sure your broker is happy to do that. If they're not your broker anymore. That's a simple thing. We make a commission. You paid for our services for a year. If you need us to do something to help you and we say no, punt. All we have to do is say, unit owner, I hear that you want to do this, but the association's policy is bare walls. It doesn't cover anything on the inside of your unit. And there's a $25,000 deductible per claim. Tell you what, get mitigation, the remediation, dry it up, clean it up, dry it up. Then call me when you're ready, when you have an estimate. Let's talk about whether tendering this claim, filing this claim is going to be beneficial to you. I have seen some personal lines insurance carriers demand a denial letter from the association's insurance carrier. It doesn't happen very often because, again, the insurance professional can put in writing, if necessary, this policy is a bare walls policy, or this policy has this deductible. The deductible isn't going to be, we don't believe the deductible is going to be exceeded. If it does, or it looks like it's going to, let us know. But until then, I don't think filing a claim is benefit to your client or ours. That is the unit owner, or the HOA. That does happen. Don't worry too much, because it can be explained away. If a carrier says, why does this claim show up as open and closed without payment for water damage? Well, we had a homeowner whose carrier needed a declination letter. So we opened it. We let the adjuster, or let the carrier close it without payment. That's not scary to any insurance carrier. It does become scary if there's lots of those types of claims. So in short, verify buildings are scheduled. Read the documents. Read the applications. Get written contracts formalized. Get a copy of the association's, contractors insurance, naming the association as additional insured, not just the accord form. Inspect things as regularly as possible. Again, once a month at minimum, maybe once every other week, twice a month. What's that? Bi-monthly, I think. Whatever is twice a month is. Once with just the committee, and once with management, landscape, and committee. And act on deferred maintenance. You got to clean it up. Get it fixed. Get it brought up to current standards so that it's not going to lead to another claim or lead to a claim, and certainly isn't going to be something that the insurance company says, fix this or we're out. Because if they're out, your premium goes from whatever it is to 5 times whatever it is. As I mentioned, the World Cup is over. But the immortal words of Dr. Seuss, don't cry because it's over. Smile because it happened. And this World Cup brought so many smiles to so many faces across the globe, around the globe, around the globe. Because the globe is a sphere, by the way. I'm not getting into this flat earth conversation. Around the world, people were smiling and cheering and to kumbaya all day loving. And congratulations to Spain for their second World Cup victory. Let's not talk about Argentina's petulant behavior, because I don't want to take away from what Spain accomplished. It was a beautiful football match. In the words of many of the soccer pundits, football won this World Cup. It was beautiful. So remember that. Remember, you should like, subscribe, and follow this podcast. But remember the feelings that we saw coming out of the people of these different cultures, of these different countries that had embraced the United States and reminded us of how great this country is, when we start forgetting sometimes because of all the other garbage that is brought, thrown at us, forced at us. Remember there was peace. Remember it was beautiful. It's the beautiful game, and it gave us some beautiful time. With that, I invite you back to the next episode of Covering HOAs with One Hot Mic.